Hey, what's up YouTube? Welcome back to Wealthy Sailor. If you watch my channel regularly and if you're subscribed, then you've probably seen another video that came out about 2 weeks ago where it was like a news thing. I was just trying to update you. I'm not sure the format yet, but at the time I was thinking that every Monday I'll release some sort of news type thing to let you know what's going on in the market and what updates I personally have that affect me. However, come to find out that I don't make a lot of trades. My investments don't change day to day or week to week even. So it's rare that I have so much movement that I need to dedicate like 10 or 15 minutes every Monday to talk about them. So I end up doing away with that on a regular basis, but I am going to do it on a semi-regular basis, and that's what comes us to today. Today is the second episode of my little Monday news informational video. And that's because quite a bit has happened, so I just want to update you guys on everything. Now, on Friday, just a couple days ago, both the Tesla and the Apple splits happened. Now, Apple, as predicted, dipped a little bit. Now, I'm very curious to see how it goes through this week because on its previous splits, it has dipped, but it's recovered pretty quickly. Apparently, people, when they see Apple at $100, regardless of the delusion of their stock numbers, they like to buy it, so it very quickly recovers. And that was kind of my plan when this all happened, is that I figured that I would buy the stock, wait for it to split, wait a couple months for it to recover, and then that also puts us into the holiday season, which I think will cause the stock to go up even more. And I figure if I sell somewhere in end of November, beginning of December timeframe, I'll make a pretty good profit on it. Now, I didn't invest in Tesla, but if you did, you should know that Tesla, even after the split, is still up 4.7%, which is really good. So it's still doing pretty well. I did not invest in Tesla, so I have no money in there, so I'm not really going to talk too much about why or anything because I haven't done the research necessary in order to properly talk about something, and I'm not going to just talk about something I don't know about. Okay, in other news, the Federal Reserve just announced a policy change where basically what they're doing is that the Federal Reserve plans to do about 2% inflation per year, which is fine. That's if you look at the Consumer Price Index, that measures inflation in the United States, and that usually goes up 1 to 1.5% a year. Well, it turns out that our target has been getting met. Like I said, we come in about 1.5% each year. Anybody who's in the military, you'll know this because under some administrations, your raise in December, it's not really a raise, it's a cost of living adjustment, and sometimes certain administrations base it off of the Consumer Price Index, so you retain the same buying power. Okay, so back onto this inflation thing. So it looks like the Fed's going to start adopting a policy where they're going to try to make the average over a 10-year span about 2%. So if we're under a couple years, then they're going to let inflation happen a little more. How do they make inflation happen a little more? Well, they lower interest price and they print more money. I mean, and that's kind of where we're at right now anyway in order to survive the COVID thing. Okay, so now how does this affect the average person? Well, one thing, inflation is not always bad. A lot of people think it is. I know I've seen a lot of stuff on Facebook where people talk about like, oh, we don't use the gold standard anymore, so inflation tends to run rampant and stuff. But there are uses for inflation. For example, if you hold debt, like I do, like I have mortgage debt, not credit card debt. Credit card debt is not the same as this, but mortgage debt, even student loan debts, then inflation, you can use that in your favor because theoretically, as inflation comes in, you get paid more because employers will be forced to pay you more in order to keep your same buying power. So they might not happen directly as a mirror image, but at least federal jobs and city jobs, most of them have cost of living adjustments every year. So you get a cost of living adjustment. So even though things start to cost more, you're still making more. So relatively speaking, things will still cost the same proportional amount of your income in most cases. If you work for private companies, Walmart, or any of the thousands of private things, I'm not sure how that works. I don't work for one of those companies. I remember when I worked at Home Depot, I don't think they did cost of living increases. I think you just work there a certain amount of time and they gave you raises, but I didn't work there very long, so I don't really remember. So if you have one of these jobs, then you might notice that things start to creep up and your pay is not creeping up along with it. That's something that could happen in the future. So just prepare for it. Make sure you budget and save appropriately now before any of this happens, in case that does in fact happen. So for debt holders, the way this helps you is that your debt is actually going to start getting cheaper. With inflation, rents on rental properties can go up 2% a year in order to match the cost of living. In addition, it causes housing prices to also go up, which means that your equity stake in your property can go up, on whether it's a rental or your primary home or vacation home or whatever. It's all going to inflate and go up. Now, your mortgage payment or whatever, your student loan payment, those don't adjust unless you have an adjustable rate mortgage, which I hope you don't, but let's assume you just have a fixed rate, because everybody who's watching this should have a fixed rate mortgage. Then as inflation hits, you can now pay off that same set amount each month, but you have more money in order to do it. The best example I could think of is, I don't know if you ever talk to your grandparents and they tell you, like, oh yeah, this house cost me $20,000 and they had 30 years to pay for it. Well, the reason they got that was because at the time it was still relatively proportional to what a house would cost us today, but over the course of 30 years inflation kicked in, and that's why it seems like such a small amount 30 years later when you learn about this. Now, it's important to note that this is not necessarily a bad thing overall. Individually, maybe it is, depending on your situation. But overall, the economy needs to self-correct. This is something that I've been talking about for a while. And so I'm not exactly aggravated about it. On the bright side, it looks like we have months and months and months of time in advance to know about this. The good thing is that although you might not get a raise from your employer, this should also unlock some of the job markets, because now financial institutions can get money cheaper, which means they can then loan them out to major employers. I don't know if you know this, but most major companies, they work on a very quick loan cash transfer system. So for example, you're talking about like a big company like GM or GE. They might take out a loan a day just to handle day-to-day things, and they pay it off immediately. It's just the way it works with the way the financial institutions take care of some of the big companies out there. So as money becomes cheaper, they're able to do that, so they're able to hire more. So I'm not sure about raises, but I do think unemployment will go down on this. I'm not an expert though, it's just something to keep in mind when you're planning your future. Now, the next thing is I want to talk about gold. Warren Buffett recently sold a lot of his holdings in certain financial institutions. Now, I want to point this out, that he sold a lot of money in banks. However, it's less than 1% of his total portfolio. So when you look at this and you're like, oh, Warren Buffett's getting out, he's not crashing the banks. He's just moving that money from somewhere else. Banks, it makes sense too, because banks have a very high price right now. So if you sell now, you're good. And then what do you keep that cash for? The next thing we're going to talk about. Warren Buffett, among other things, sold those banks so he can get cash to buy gold. Not gold, the commodity, the actual stock ticker gold, which is a company that helps mine, refine, and produce gold. So why would he do this? Well, the only reason I can think of is if you go back to 2007, if you remember, when everything was crashing, gold and silver shot up. I mean, it went up like, it doubled in the period of like a year. I think what's about to happen, not about to happen, but going to happen, and I think what Warren Buffett's preparing for is that there's some trouble in the stock market. It either stays stagnant, which is what I'm kind of thinking it's going to do, or it goes down. When it goes down, a certain percentage of people start buying gold up. They think gold's more secure and they invest in gold. It could work, I don't know. I personally do not really invest in commodities because I have a problem with the process to liquidate that commodity if something happens. Now, Warren Buffett did not buy any precious metals, or at least not publicly. I'm sure he has stuff in his private portfolio, but publicly he didn't. Why he bought gold isn't because he believes in the health of the actual commodity. He just believes people are going to start buying gold, and he wants to profit off it, which is extremely smart. He also sold those banks that we talked about earlier so he can have cash, because I think he's ready for the next kind of market stagnation and he wants to buy things. Now, there's 2 points I'd like to make for this. One, if you're watching this channel, I hope by now you realize that trying to time the market and pay attention to all this stuff isn't the best strategy for the average person. It's not the best strategy for me. I don't know everybody else's story, but it's probably not the best strategy for you. Again, not an expert. I'm just explaining to you what I think. But he's trying to make sure he can make money off it. But the best strategy, I think, is that just continue to keep buying. If the stock market goes down, keep buying things. Keep putting stuff into index funds that are well diversified. If you have 401k, IRA, Roth IRA, keep putting money in all those things, even college savings plans. If you can, put more money into that stuff. And the reason being is because everything's suddenly cheaper. Think about it, you're actually buying something. When you invest, you're buying a section of a company, a small slice of that company. If the price of that company gets cut in half, then keep buying. You're now buying twice as much for the same amount of money. And if you're a well-diversified portfolio, then that pretty much alleviates a lot of the risk of these companies going out of business. I would not recommend you buying individual stocks and trying to time the market. So the reason being is because then all your eggs are in one basket, and if that company does go out of business, then you lose all your money. And for any of you who are like, oh well, big companies don't go out of business, and run. So we'll move on from that. So a lot of this is speculation. I don't know if that's why Warren Buffett did what he did, but the thing is that it aligns with something that I've been thinking about for maybe a year now, that the market's going to either stagnate or go down. So that fits. Now, the other thing that's really interesting about that is that even if that does happen, I'm not necessarily sure if gold and silver are going to shoot up again. And the reason being is because we have something that we've never had before. We have cryptocurrency. And although I do not believe cryptocurrency is an investment, I think it's more of a gamble, I do want to point out that if you're trying to figure out what the masses are going to do, a lot of these people are a lot younger. Like, the applications and able to time the market now are a lot easier to use. You have M1 Finance, you have a bunch of different cryptocurrency things, you have even cryptocurrencies on Robinhood. I think that maybe if there's another recession coming up, I honestly think that cryptocurrency might take the place of gold and silver. Unfortunately, I don't know how to figure out which cryptocurrency is going to go up, if it's even possible. I don't know if Bitcoin is just going to continue, since that's the leader of the industry. I don't know if it's going to be something else. I don't know if all that panic buying is going to be spread out evenly among all of them. I still have my Dogecoin holdings, which have doubled in the last month and a half because of the TikTok thing that we talked about last time. But I did not buy that for the intention of it going up. I actually just bought it as a joke. I'm holding on to it because honestly, I'm curious what happens with it. If you're going to do anything, the suggestion that I have to make to you is contact a financial advisor, make an IRA, make a 401k, and just keep steadily funding them. If the market goes down, don't panic. Keep funding your diversified retirement accounts. If all that is done, then what I would do is I would save cash for the housing market. If a recession does happen, housing markets usually go down. Recessions happen, people get unemployed, they can't make their payments anymore. It's unfortunate, it really is. On a quick side note, I find myself actually sometimes hoping for a recession because I do have cash ready to be spent there, and I have to almost remind myself that during times of economic crisis, suicides tend to jump up, and I don't mean a little bit, I mean like they double nationally, and the United States already has like a high suicide rate. So for it to double over something like that, it's really tragic, and I have to check myself, like, it's not just numbers, it's not me just buying assets or investing or whatever like that, it's ruining people's lives. Sorry, I know that was pretty serious, it's a real thing that I try to keep in mind when I'm looking at all this stuff. Anyway, regardless of what happens in the future, keep funding your retirement accounts, make sure your emergency account is well funded, and the best thing I can offer advice, if possible, is start trying to expand your value, your employer or your employee value. Take extra classes if possible, learn new skills and stuff like that, because if this does happen, then some people might end up unemployed, including myself, and in that case, we need backup plans. Anyway, guys, I hate to leave it on a sad note. But I feel like if you're watching my videos, you at least want a little bit of advice and warning, or else why would you watch my video? Otherwise, it's just some guy talking to a phone for 15 minutes a day. But anyway, I'm trying to prepare you for things that I think might happen. Now, I am not saying that any of this will happen. I'm not saying it won't. I'm saying that based on the information I'm getting, this is stuff that might happen. If you disagree, please leave me a comment below. I don't like to argue, but I love to debate. So leave a comment below, and I will make sure to chime in with my opinion or a counter opinion, or maybe I'll agree with you. Give me a like, share, subscribe if you've enjoyed the video, and if you learned something. Thank you for watching. Stay safe, and keep saving.